In this video, the speaker discusses the concept of decentralization in Bitcoin and Ethereum, which is frequently referred to as the answer to all of the issues that are plaguing the world today. However, it is necessary to point out that Bitcoin and Ethereum are not exactly as decentralized as the majority of people believe they are. This is something that needs to be brought to everyone's attention. As of the year 2023, there were only 2 mining pools that controlled 51% of the network's processing capacity. This posed a serious risk of centralization and manipulation because there were only 2 mining pools. A tiny handful of companies, such Leo, Coinbase, and Binance, held the majority of the staking power on Ethereum by the time the year 2024 came to a close. This concentration is problematic because it creates the circumstances for market manipulation and contradicts the fundamental principles of decentralization. It does this by providing a disproportionate amount of power to a small number of participants, which is a concern. Both the investigation that was carried out by Trail of Bits and the participation of large organizations like as DARPA are important. Give credence to the fact that this problem is quite serious. The act of buying an item in one market at a lower price and concurrently selling it to another market at a higher price in order to profit from the difference in price is an example of the practice known as arbitrage. Arbitrage is a sort of asset trading that involves taking advantage of price disparities between one market and another. In the paper that was published in 2024 by the New York Federal Reserve Bank, the activities of arbitrage on the Ethereum network was investigated. Arbitrage is a way of conducting business that involves taking advantage of price disparities between 2 or more parties. A number of businesses operating on the Ethereum network have control over significant points in order to concentrate liquidity and maximize their revenues. This is typically done at the expense of regular investors who are on a lesser scale. It has been established that there are linkages between Wall Street, the government of the United States, and the top 13 holders of Bitcoin. The United States government, BlackRock, Fidelity, Grayscale MicroStrategy, Blockchain, Kraken, and Robinhood are just some of the companies that own these holdings. A sizable portion of the nearly 4.4 million bitcoins that are in the possession of these participants constitutes a significant portion of Satoshi's wallet, which amounts for 28.39% of the total. In addition, the speaker makes the observation that exchange-traded funds and the activity that surrounds them are only going to continue to rise in the future. In the year 2021, Elon Musk was tagged on X, and he stated that Bitcoin is highly centralized, with the great majority of the cryptocurrency being controlled by a tiny handful of large mining businesses. A single coal mine in China experienced flooding, which came dangerously close to taking the lives of the workers who were employed there. This demonstrates that this is still current in today's world. In the month of May in the year 2021, the hash rate of Bitcoin had declined by 35. Furthermore, it was demonstrated in 2012 that Chinese miners were the ones in command of the blockchain protocol. On the other hand, mining companies that are geographically located in the United States currently possess 7070 of Bitcoin, while the 4 corporations that are included on this list own 77.53% of the hash rate power. It is important to note that despite the fact that Bitcoin and Ethereum are decentralized, they are nevertheless susceptible to significant uncertainty and concentration issues. The factors that have been outlined above, as well as the likelihood of market manipulation, should be taken into consideration by retail investors when they are deciding whether or not to join in these networks. The author of this piece, Whitney Webb, delves into the inner workings of Bitcoin as well as the public-private relations that are present inside the cryptocurrency industry. She draws attention to the role that the Treasury Secretary's office plays, which has been a key participant in the business ever since it was initially founded many years ago. She says that this office has been responsible for a very long time. When it comes to situations in which the private sector is in control, it frequently creates regulations that are favorable to the private sector. A good illustration of this is the carbon market, which has been utilized to force folks to make use of it. On the other side, this tactic does not produce the desired results. The private sector is employing disruption and desperation as a means of attracting people to join its systems in nations such as Argentina, where individuals have lost a large amount of their purchasing power since the beginning of the economic crisis. This is despite the fact that they are spending billions of dollars to develop these systems, yet nobody is interested in using them. In addition to this, they are making an effort to capitalize on the desperation that is becoming a result of policies that have been imposed in either the public or private sectors. It is generally agreed that Bitcoin is an indispensable component of these agendas. It's true. Instead of functioning as a currency, it must continue to execute its functions as a tool for asset storage in order for them to be successful. In order to ensure that Bitcoin users are in compliance with the regulations, Larry Fink and his colleagues have been focusing their efforts on standardizing the discourse in the Bitcoin domain throughout the media. As a consequence of this, there has been a shift in the culture surrounding Bitcoin, with users getting content with talking points that are comparable to those utilized by sailors. The private sector's goal is to exert control over the rails that the system functions on, and as a consequence of the devaluation of their money, individuals are striving to evade their financial commitments. This is the mission of the private sector. In the event that individuals do not comply, they have the option of utilizing JP Morgan coin as a means of evading the Federal Reserve. Whitney, on the other hand, warns that in order to revive the economy, the private sector must assume control of the issue and take responsibility for it accordingly. Another factor that she brings up is the fact that a significant amount of money and effort is being invested in the process of standardizing the discourse in the media on Bitcoin. The reason for this is because they want Bitcoin users to comply with those regulations, but Larry Fink and his team are free to do whatever they want with Bitcoin and shape it into whatever they see it to be. In conclusion, Whitney Webb emphasizes the significance of a cultural shift in Bitcoin and the necessity of a shift in the language used by the media in order to address the irresponsibility of banks and central banks with regard to their responsibilities to the financial system. If the private sector decides to pursue this course of action, they will be able to continue to exert control over the market and provide a more regulated environment for the digital currency industry. Both the sailor mentality and the Bitcoin Marxist mindset have the potential to undermine the fundamental goal of Bitcoin, which was initially to act as a tool for Wall Street. This is a risk that occurs when both of these mentalities are present. Because of this, there has been a struggle against individuals who possess Bitcoin in order to ensure compliance by limiting debate in the media space about the cryptocurrency. They expressed their satisfaction in exchange-traded funds, FS, and the position of the United States government as one of the largest purchasers of Bitcoin. Max Kaiser stated their delight in everything. On the other hand, the procurement of Bitcoin by the United States government was not the focus of this event. To be more specific, it was about the presence of Bitcoin Maxes at a number of different locations. This content is lauded by media companies such as Bitcoin Magazine for the purpose of generating clicks and avarice, which has taken over the concept of Bitcoin ever since it was originally established. For example, if we compare Bitcoin in 2009 to Bitcoin today, we can observe that there is a considerable difference in the number of holders as well as the ecology that surrounds Bitcoin. An initial notion for Bitcoin was to celebrate and welcome BlackRock's development of an exchange-traded fund. This was done because of the concern of being dominated by CBDCs, which eventually led to the creation of Bitcoin. However, the uncommon item that is essentially Bitcoin will soon be controlled by corporations. This is due to the fact that large exchange-traded fund companies like BlackRock and Fidelity will soon be able to acquire Bitcoin through these ETFs. The ultimate goal of these companies is to exercise influence over the retail industry by imposing and pushing things onto it. This is the ultimate objective. Due to the fact that Wall Street owns 8.15% of Bitcoin, it is vital to guess on what may occur. Retail is not the reason that these companies are located here. Instead, they are here to satisfy their desire for dominance and gluttony. In order to achieve the ultimate goal of Bitcoin, which is control, it is vital to avoid embracing the control components solely for the purpose of fulfillment. However, despite the fact that Bitcoin is decentralized in its current form, it is not as secure as its supporters claim it to be. The Bitcoin Max has continued to propagate ideas that are fundamentally nonsensical, such as the assertion that Bitcoin is not property but rather virtual currency. If this turns out to be the case, the owners of Bitcoin could have their cryptocurrency taken away from them. There are other approaches that they are attempting to use in order to achieve their ultimate goal, such as the Operation Choke. The mindset of a sailor, combined with the maximum amount of Bitcoin, is encouraging individuals to enter a world that is less centralized and more regulated. I am making it a priority to refrain from embracing control for the sake of greed and instead focus on the benefits that Bitcoin offers as a tool for Wall Street. By taking this action, we will be able to work towards a Bitcoin that is more stable and decentralized, which will be to the benefit of all users and the larger community. I am making this decision because I believe it is of the utmost importance.